So the chapter 8 part B, and we continue the question number 2. So we did four principle. First was the cost principle. Cost mean so the price what you paid for it. Then we did the objectivity principle, means if you can verify what price you paid, so that is called objectivity and is closely linked to the cost principle. Then we did the consistency principle. Consistency means same accounting principle happening in the following years. And then we did the so the revenue principle. Revenue means income earned but not received. And examples are subject removal, phone bill,
JB's bills.
yeah, JB's fee, right? And then we did we are doing now matching principle. So matching principle, I say wife or visa statement, right? So wife spends the money, use the visa, right? Who pays the bill? Husband, right? Yes. So the question number 7, the practice of recognizing expenses as they are incurred rather than when they are paid is a characteristic of expenses incurred but not paid yet. So you have used the visa, right? But have not paid the visa yet. So what do we call it? A matching principle, right? Same way when we use the phone, we haven't paid it yet, right? Okay. Or you can say my fee too, right? And so the answer is number 3. Yeah. And then from there we go to the question number 45 and 51 first. So go to 45. So 45, the subject clauses have just been removed from a contract purchase. Highlight subject clauses. Even if you don't read the question. So what do you think? Which one should be the answer? Subject clause. Which principle? Which one? Revenue, right? Income earned but not received. So subject clauses have just been removed from a contract purchase sale, but the sale will not complete for another 17 days. Sandy salesperson has already recorded the commission from the sale as income. Which of the generally accepted accounting principle was she following? Which one? Revenue principle, right? So income earned but not received yet. So then we do the question number from there 51. So 51 we go. According to the cost principle, which one of the following statement is true? Number 1, the market value of an asset at the date of purchase should be reflected on the balance sheet.
Right.
Number 2, interest expense may be deducted for tax purpose, but principal payment may not. Third, an asset that has been acquired for less than market value should be shown on the balance sheet for its purchase price. Number 4, expenses are recognized at the time they are paid, not when they are incurred. Is that right? So what do you think? So you're gonna read again, right? Yeah.
According to the cost principle, whichever the following statement is true, the market value adjusted at the date of purchase should be reflected on the balance sheet.
Yeah.
Interest expense may be deducted for tax purpose, but principal payments may not. And interest that has been required for less than market value should be shown on the balance sheet of its purchase price.
Yeah, so basically, if you read all of them, right, and what we are looking for? We are looking for what? Cost principle. What is the cost principle?
Price you pay.
Price you paid for it, not asked. So the gas station guy, so they are asking 2.3 million, but I paid 2.2 million. So what's the cost? 2.2. If we can verify, what do we call it? Objective, right? So it's number 3. An asset that has been acquired for less than market value, right, should be shown on the balance sheet for its purchaser price. So whatever we paid for, basically. Okay. So you can highlight acquired for less than and what you paid. So it's number 3. And we have done now all the principles. But we go back to the question number 2. It says 20th, right? So why we go to 20th from there? Because we are asking about balance sheet. And most of us don't know about balance sheet, right? What's the time?
1 minute left.
Balance sheet, right? So if we go to question number 20th, right? On 20th you see this big bulky statement, right? Right? Ambleside Production Limited, highlight limited. It means it's a limited company.
Okay.
Right? So that's it for this part.